Eastern time on the 31st. We are just in front of the FOMC. That's going to be today at 2 p.m. with Jerome Powell, the press conference. Expected rate decision is a pause, and the thing we're going to be looking at is really March and May. If the Fed's going to cut, when is it going to be? What's the market anticipating? A lot of the rate cut cycles for this year have already been priced in, so we're going to see how that plays out with price action today. So, pretty busy morning with the trading rooms. We've got some earnings plays that I wanted to take a look at for the midweek market minute. Some of the notables right here. I'll just highlight this. So I have some trades running on Google, which is right now profitable. Microsoft is upside down a little bit, and AMD. So I've got some trades running on both of those. The expiration's out to next Friday, the 9th, because I wanted to take into account that we have FOMC today for higher volatility. We've got non-farm payroll on Friday. I also put on a trade for Meta and Amazon going into tomorrow's closing bell, earnings after market. And I did price out an Exxon and Chevron. I just don't like them, so I'm not going to take earnings plays on those. But on top of that, we also have for equities on demand trades on the SPY, trades on the QQQ, the DIA, and the IWM. We already hit earnings this week on CLF. We can see on Monday, CLF was it's a miss on EPS and revenue, but buybacks are coming, and that's lifting the stock price pretty nicely. JetBlue actually beat expectations and holding lows nicely. I'm looking to see if JetBlue will be kind of a value airline play that gets up to $9-10 from a $5 and change position. Pfizer still in downtrend, but divergence and oversold. So I'm looking for some bottoms in Pfizer. I mean, we could drift lower to like $25. Worst case would be $20. I would own Pfizer all day in the low 20s. My break even right now is like $29. We're trading at 27 and change. So I'd like to see Pfizer get back up to $35 or $40 before it takes some profit. Cleveland Cliffs, if we blow through, $25, $26, that'd put me up close to $10 a share. I wouldn't mind taking some profit there as well. That's kind of it for the earnings play this week. There's 320 companies. Next week we have over 1,000. So let me go into the StockTwits calendar right here. So earnings today, we have 104 companies. Tomorrow, 28 on Friday. Go into next week, and the numbers get a little crazy. The 9th. Why does this keep changing? All right, I take that back. All right, so we're getting some juggling here. Last week when I looked at this, or earlier this week, it might have been Monday. This was like 600 companies on Friday the 9th. So it's still a decent amount reporting, but it's not 1,000 companies. It's going to be 48 and 126 and 132 and 129 and 19. So about 454 companies next week per the calendar. So it can change, before market, after market, but we're still in the midst of earnings season as we roll into February. So what else is going on for this week? I took a look at the currency strength chart. Who's trading the yen this morning? Maybe we have some traders out there finally saying, "Hooray for the yen!" Okay. Let's see. Psychotic gamer, a little evil. What's up, everybody? Welcome back for a midweek update. FOMC at 2 p.m. Eastern time. I'll be live at 1:45 p.m. Eastern time with A1 Trading on their YouTube channel. So we'll be doing it'll be a StreamYard session, but they'll push through all their outlets, so you can find A1 Trading on YouTube, and I'll be there to join with Nick Sayak and team. So yeah, yen's finally making a run. I took a look. We are short on the pound yen and still hanging in there. We are short on the euro yen and still hanging in there. And we are short on the CAD yen and still hanging in there. So there's obviously a long ways to go. Maybe this is just a one-off move, and all of a sudden the balance of the day comes all the way back down, or maybe that's tomorrow. But for right now, it's fine, and everything else is pretty tight This is a tight area for all of the currency pairs. The yen's just a little outlier today. Uh, Good indecision on the dollar to take a look at. I mean, I think we've got some directions coming. It's just not ready right now. So here's the dollar index, right? So the dollar index after the dust settles today with FOMC, are we breaking lower? Are we breaking higher? It might go nowhere today. We might have indecision on the dollar, so you just kind of wait it out and set a chart alarm above and below and see if you got some dollar crosses to trade afterwards. That'd be fine. Oil, gold, silver. Oil is at 76. I would personally like to see a pullback to if we get oil to pull back to equal lows or equal areas around 72.50 to $70. I'll probably take a long position on oil. How would I do that? I'm not trading U.S. oil in MetaTrader 4. I'm going to trade it through USO, and USO is not even close to the level that I want it to be. I was hoping that USO would come down here. We had a 60 by 59 that was pending. There's nowhere close to that getting filled. So if there's any chance that we're not quite done with this downtrend, then maybe we get that back to these levels. But the better technical chart is US oil, and I think this is still an uptrend. I just want to be willing to take, smaller trades and smaller risk percentages. I told traders this a few weeks ago, you buy it around 72, 72.50. That's trade one. You have a second trade down here at major support around 65, and then your upside is pretty nice. You've got about a 2-to-1 upside, actually more than that. Actually, I mean, if you get a stop loss down here, this is your risk area. You probably have a 3-to-1 to the upside to revisit those $90 to $95 highs. So I think oil looks pretty good bullish. Gold and silver. I put some videos on Instagram and TikTok on this, but probably two of my better technical setups right now. I mean, we're at 2050 on gold. It's a really messy, noisy spot right now. I'm not taking the bait unless I was going to do this. If I'm going to buy gold right now, I'm buying now with a stop loss below 2,000, and I'm going for upside. That'd be the trade that I justify right now. Otherwise, I'm going to wait for price to break above. I'll take a buy trade. If we go up and pull back again, I'll take a buy trade. I'll look for the stop loss to be below recent low, or just make sure that this 2070 level holds. And once we start making fresh highs, gold to me is in a bull market at that point. I mean, this has already been a pretty good run. But what this looks like to me is let's say that I'm going to discount that for a second and just say this could be a nice little ascending wedge. So we go up here, ascending wedge, meaning we have equal level resistance, but when that resistance breaks, that trend resumes. Right. And so it's a little messy, a little noisy right now, but because the bears are not taking out 2000, I think gold still looks good to the upside. Why would gold be an attractive investment this year? Price action number one. And number two, if the Feds and other central banks are going to be cutting rates, it changes the attraction of currencies. This is one thing we talked about this morning in my flex trading room. I took a screenshot of the central bank rates and just said, look, let's timestamp this. This is January 31st of this year. In the next month, in the next 6 months, in the next 12 months, as we get to December of this year, I mean, one of the last sessions I do in 2024, let's have a look at this and see how much this changes. I think that's what the market was excited about, is that all this stuff is going to be changing. Banks are going to be cutting rates for the first time in the last 2 years. Let's see here. Gold could go up or fall at FOMC. Your question has both answers in it. So yes, it could go up or down. Look, the reality is all this new stuff, like everything that happens with FOMC, everything that happens with non-farm payroll, it's an excuse for the market to move up or down. That is why I'm positioned that way in a lot of my trades. So if you look at my spreadsheet for my trading room, we've got some trades going on here where we are trading both directions on the Qs, both directions on the DIA, both directions on the SPY, on the IWM, all these earnings plays. I don't really care what direction it goes into. I'm just trying to price it out accordingly where there's a higher probability that if I get direction right, up or down, I can make some money. Now, granted, I've got to take one loss. If price, Google, for example, price is down today. My put side, my side that's trading the bearish direction is in profit. Enough so that I could take profit on the trade right now and close out the whole thing. Why have I not taken profit yet? Because I want to see if there's a little bit more push to the downside on this instrument. And we've been up, 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 but there's a little correction based on the broader market. I think the SPY is just starting to topple over a little bit. We've got some pivots and demand levels to come back down to. The DIA hasn't pulled back at all. We're sitting here staring at overbought conditions with divergence. The Qs overbought conditions with divergence with a gap lower today. We could fall if the indexes fall. I think your Mag 7 stocks fall with it. I think that's where the market's going to sell off a little bit. I know we still have earnings for the broader market, but it's really going to depend on. I mean, the indexes will move. So I'm not trying to pick a direction necessarily. I'm just trying to trade volatility. I think right now we're going to get it. Hopefully, my window is wide enough, and my net is wide enough that I can capture some of these moves and get those. Ideally, I'd like to have a max profit, but if I get 25 and 50% returns, I'm also good with that for those positions. It adds up. Okay, just in time. What's up, dude? How are you, man? Nice to have you join. So that's everything going on with the major indexes. We got some volatility up on the day. The VIX is off those lows. And again, Fed could bring some noise. Here's the daily chart on the VIX. So we can go back onto the weekly chart and see if there's any of these impressive spikes to the upside, which every now and then we're going to see. So when the VIX is just like peppered off these lows, we tend to get these spikes up, right? Again, maybe that happens today. Maybe that happens over the next week or so. How broad, how big? I mean, could we go from 15 to 25? Maybe. Can we go to 15 to 30? Maybe, right? But a lot of times when that happens, I like to fade the VIX. I mean, we get a big spike up, I'm fading the VIX. It's such an outlier to have this VIX really sustained. I mean, this literally like spikes up and starts to fade within the same day or within a couple of days. So if we get any type of significant run to 24, 26, $28, I'll probably end up fading the VIX back down. And I'll look at some other instruments like the VIXM or the VIXY. There's ways to trade some options around those and take advantage of that. Okay. Currency wise, I'll revisit that. We are up on the yen. It's starting to fade off those tops a little bit. Everything else is really clustered. The yen's getting stronger. Again, by 5 p.m. today, when we roll over to a new day for Forex, where's the yen? Is it still strong on the day? Is it going to carry into the Asia session? Is anything happening right now? I kind of want to check this out. Is anything happening right now for uh, real time news on the yen? Let's see here. 13 EVs. That's a big change. Real Madrid. Let me go to BOJ or JPY. Let's see. 2-year yield. JPY and CAD likely move sideways in the near term, recovering this year. Aussie yen extends losses. IMF no comments on yen exchange rate. Makes case for intervention. Oh, interesting. Back near overlight lows, clings to 160, hammer surfaces. All right, let's see what this is about the IMF. Very curious here. Director of IMF's Asia Pacific Department had good discussions on exchange rates with Japanese authorities who are committed to flexible exchange rates, which act as a shock absorber. FX intervention could lower rate excess volatility and better align exchange rates with fundamentals. Little response, and that's about it. Okay, well, I thought there was going to be more there. Well, we've seen levels of intervention. If you go to a dollar yen cross, I mean, anyone that traded this in 2022, even in 2023, we started to see some silly. This was one. So draw this out. So that's a little intervention candle. That's a little intervention candle. We go back to the levels where we had that crazy run in 2022, and then it started to get the decline late 2022 into early 2023. Intervention was there and there and there, right? It's this is the scary thing about trading forex. I mean, flash crashes and interventions and manipulation that does happen. So this is why we trade forex with small trade sizes. This is why we give the price action time to work. This is why I build positions, and I might take 3, 4, 5 positions, maybe 10 positions when I like something. Not like I'm not talking like just endlessly dollar cost averaging in. I'm talking about testing levels a couple times, having price prove that it wants to go my way, then add a few more positions. I build a group and then take group profits. I rarely take a position where it's like a binary. This is where I'm in. This is where I'm out. This is where I take profit is. Those trades are great, but there's just so much. There's so much noise in a liquid market like forex. There's just a lot of noise. There's a lot of efficiencies, and traders get stopped out and beat up all the time. So I trade small. I build positions, and it's worked for 14 years. you know So I'll keep doing it. But yeah, we'll see what happens. And intervention stuff is frustrating because if traders are essentially waiting for the Bank of Japan to intervene and take it down to obey a technical setup, that's what we've been waiting for. I mean, traders were like, "Oh, it's coming back," and I'm sure a lot of traders were trying to get short in here, which was a good area for the short-term move. But then it came all the way back to this level, and traders are short there. But if you're trying to hold on to short it here, take it all the way down to this low, it's going to take some time. So you really have to develop. You got to develop a ton of patience in some of these markets. Okay. All right. Crypto Impact saying, what is your strategy? I mean, I've got a ton of them. If you want to start out with, learning some strategies, go to my YouTube channel, youtube.com slash, that was good, right? youtube.com slash Chris Pulver. If you go to my YouTube channel, there are a ton of videos. Let me go to it right now. And there's a playlist. I just did Trading 101 and Keep It Seriously Simple. There's a whole playlist in here. So where are we at here? Create a playlist. Here's a good one. So there's Trading 101, Trading Education. If you play these, there's like 70 videos in there. Support resistance, trade size, patterns, all sorts of stuff. So you can check that out. That's a good way to start. I get a lot of good feedback on those videos. They're there for you to help learn and polish your education. I trade stocks, I trade options, I trade crypto, I trade forex. So I trade a bunch of stuff. I just I have a lot of strategies. I have a lot of robots. I've got 3 that run full auto. I've got a ton that I can deploy at my discretion. Like I said, forex trading. My favorite way to trade and the way I've made the most money over the years is by taking bigger time frames, building positions, and holding until they hit my profit targets. I've been in Swiss franc pairs for the last year plus, and I'll just show those really quickly. I mean, traders know this in my flex room, and I've got a class called Portfolio Builder. I plan to double my account with just Swiss pairs. I'm gonna try. CAD Swiss, I mean, we're sitting at these like 25 and 30-year lows. There's positive swap right now if you're long CAD Swiss. I can't promise this is the bottom. I can't promise this is where, the market will never go lower. But I do think that technically speaking, this is as good as I can find a currency that is low, inexpensive. Positive swap is a good thing, which means I get paid to hold these positions because the Bank of Canada is at 5%, the Swiss is at 1.75. So I get that positive differential. Brokers are giving that back to their traders now, as opposed to the liquidity providers not doing it. So I'm long on Swiss pairs. I'm up a few $100 in rollover right now since I started this course Portfolio Builder. But my personal account, I mean, I've collected thousands of dollars in the last 12 months by just holding positions on Swiss pairs. It took until 2023 to start to get the positive rollover. But like I said, favorite way to trade for me is I'll wait. I average in here. We got a trend line break. I put in another position. I've been kind of scaling myself in at certain price levels. And once this starts to show promising signs that we're going back up, I'm just going to add more positions to it. And my bigger picture target is way up here. So at the very least, I think that's a high probability target for me. If I can turn a group position, let's say around 6,600, and take profit at 72, that'll be 600 pips net on, let's say, if I have 600 pips on a standard lot position, which is a $10, roughly $10 a pip. I mean, that's 6 grand. Okay. But it's more than that. I mean, I'm probably in for, 30 to 40 lots in this position. So when this is all closed up, this should be worth a few $100,000 when it's all said and done. So that's the idea. And I have to wait for trades like this. It takes time and patience and commitment. That's one strategy. I've got other courses that are just easy to follow, visual indicators, when to get in, when to get out. It's you get some nice swing trades and swing scalps and things like that. So to answer your question, I've got a ton of strategies. Question I ask for all of you is, what do you want? You want to be a trend trader? I'll teach you how to be a trend trader. You want to trade ranges and trade structure and patterns? I can teach you how to do that too. So been doing it for a while. So I am, strategy agnostic. I will do whatever it takes to get the job done, and I'm here to help. On that note, I know in my Discord group, I talk about this quite a bit. I get this offer and ask for questions. If you join my Discord group, I'll post a link in this channel for the group chat. I also have a private instruction tab in here. So if I have anybody that's interested in doing, private workshops with me one-on-one, or getting a small group together, group of 4, group of 5, group of 10, I max it out at 10. I will happily spend, 1 hour with you or 8 hours with you. And it's your time. And I will, I listen and I assess. And a lot of it is, giving traders the confidence to know, like, you can do this. And lot of traders are like right there. A lot of traders, they have a strategy, they have education, they have a lot of doubt. The markets and the losses that they've incurred and the uncertainty that they have, it's tough. I mean, it is a mental battle. And so that's really the biggest part is like mentally getting over the trade size or the emotions. And you're not over the emotions, you have to manage them. And then the other side is, does your strategy work? I mean, if I look at your account or your statement or your trades in your journal or whatever you have, and you're taking losses that are way bigger than your wins, that's a tough position to be in. Um, I typically am trying to take trades where if I'm closing out for profit, it's favorable, right? If I'm you know risking 1%, I'd like to make at least 1% or better. In this case, in those Swiss pairs, I mean, I'm willing to risk about 5% of my entire portfolio for that trade, but my upside is probably 20 to 25%. It to me, it's a huge no brainer where there's so much profit to the upside. That's why I'm taking the trades. But I'm keeping the trade sizes really small because price has to prove a lot. Price has to get into a lot better position to show a lot more bullish evidence before I'm going to start adding positions and making that trade size bigger. Okay. Same thing goes for option trading. Option trading is one of the best vehicles for defined risk. I risk 1% to go after 1%. I risk 1% to go after 0.5% with a super high win percentage. I risk 1% to go after 3, 4, 5%. It's very possible. I mean, I've never seen an asset like options where I could risk intraday, for example. I could risk $100 today, and on a good day like FOMC, if the market's going to move 5, 6, $7, I could turn that $1 risk into like a $3 or $4 win, and have like literally a 2 to 300% gain on that position for the day. I don't know of anything else that's really going to do that for you. So options are great. I know they can be a little intimidating because the vocabulary is silly and it all sounds crazy, but it's not that hard. In fact, again, YouTube channel, I've got videos in here. I just did an options 101. I'm doing all this stuff for Market Traders Institute with a new subscription service that we're running. And I mean, I've just been piecing together and simplifying like this strategy and this strategy and this way to trade. And it just, revisiting the lessons all over again and keeping it very simple is great because it just helps me teach and make it more precise and more streamlined. Because my job, as a instructor, if I'm teaching traders, I want traders to learn faster. I mean, yes, you're going to have market education and market tuition, and you're going to learn the bumps and bruises, and have the scars and badge, the rite of passage from like I've been in the markets for X amount of years and I haven't made any money. That's fine, but I mean, if I can help you learn faster, embrace a couple of strategies that are working, they resonate with you. It's just a lot easier to watch people have some success. So all good. Okay. All right. Let me get back to some charts here. So, just a little precursor. I'll be joining Nick Siak and team at 1:45. You can probably see them if you search for A1 Trading on YouTube. They should be pushing here around 1:45 or 2 p.m. They probably have, yep, right here. So here's live FOMC at 1:30. So if Nick starts the session at 1:30, I'll jump on there probably at 1:45 and be a guest for the day. He's got Papa Powell in there and the Santa Claus. Yep, that's funny. So I'll be with them at 1:45 or so, and looking forward to that. As always, I usually join up with them for FOMC, and there's going to be hopefully some more fireworks today. So currency strength, Japanese yen getting back up here. I'd like to see if we break the upside at 100. And, maybe the JPY gets really strong. Another thing I'd be watching today is going to be the dollar. I mean, the dollar's down here, one of the weakest of the day, coming back into the mix. But let's see what old Powell says. News wise, let me go. I think I've got the watch tool right here. If you've never seen this tool, this is what we check on quite a bit. This is the expectation for today, not expected to change. So the Fed's going to pause. It's still going to be 5.25, 5.5% for the official cash rate. The message that's going to change, and you can see that this has already shifted. Okay, this already shifted. Literally this morning at 8:30 a.m. Eastern time, this was about 50-50. And now the market is already looking at, okay, there's going to be another cut. So the cut was initially, as we got into late last year, we got into September, October, when the markets were drawing down. It was this higher for longer narrative, and everyone thought that the first rate cut in 2024 was going to be June, right? June, July. That very quickly shifted to May, and that very quickly shifted to March, and that's where we got that November, December holiday rally. So here we are staring at this March. The market's anticipating that there's still going to be a rate cut coming, 25 basis points. By the end of the year, the market is expecting a 3.75 to 4% window which is going to be roughly 125 to 150 basis points different than where we are right now. So this is what's going to be interesting. Now, um, this doesn't mean anything as far as like stock market direction. Okay. What I think is going to be interesting is we could have, and I'll type this out. So we could have the interest rates that were, 14 to 18 months of crazy, ridiculous, 0% from COVID all the way up to five and a half, five and a quarter, five and a quarter, 5.5. So it just happened in such a short amount of time. Like yields were crazy, bonds were down. It just was havoc in the markets. But now the outlook is that the Fed is going to be cutting, 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 cutting. Okay. Now, what does this do for the market? Well, I am wondering if by the time these rate cuts start to sink in, a lot of the good stuff with this rate cut cycle has been priced in. Not saying that the market can't go higher, because here's what I think could happen. Last year, and over the last really 2 years, if I'm grimacing, sorry, I broke my arm yesterday. I know people in my trading room know that, but it's day two and it's pretty sore. Okay, so we have money market, fixed income, low risk vehicles. We saw about 5 to 6 trillion dollars in totals in 2022 and 2023. Okay, if this tranche, just meaning this pile of money, so let's say if these funds sense lower yield and more opportunity in equities and bonds, come on, there we go. Equities and bonds, money will flow back into markets. So even though the Fed could be cutting rates, even though this money market stuff could be depleting and these deposits go down, somebody just asked, "What's your view on bank closings?" It's going to happen. I mean, we're not hearing a lot about it because what happened when we had First Republic and Silicon Valley, and Signature Bank. Those are three of the largest bank failures in the country's history, and it was backstopped by the Fed. So I think we're going to have business closures. We're going to have higher unemployment. We're probably going to see the unemployment rate maybe sneak up to 4%, which is what the Fed wants. I mean, we need to have some type of economic slowdown. There's good resiliency in the economy. Can we handle higher rates for right now? Yes, but I don't think the Fed wants to raise rates any higher. Look, there's going to be bank closures. There's going to be bank closures. There's going to be the healthy banks like the J.P. Morgans, the Wells Fargo, the Goldman Sachs, the Bank of Americas. They are probably going to absorb some regional banks, some credit unions. Who knows? Like, I just think there's a reason 2008 created some really harsh lessons, and from there you essentially have this toolkit that is hopefully going to prevent that from happening again. Doesn't mean it's pretty, but it means that it's just going to be like higher concentration. The you too big to fail will continue to kind of be the case where they can absorb and they can weather some of the nasty stuff that's out there. Um, I mean, look, stuff can get written off, right? I mean, you could absorb all this terrible debt. You could absorb all this terrible, treasury debt that's supposed to be risk free, but you're overexposed and you're out over your skis. And a bigger bank can be like, "We got it," because here are the terms we'll get it from, and we'll do something with the government. And they're all in the same boat together. I mean, the government doesn't want banks to fail. Banks don't want, their loans to fail. They don't want their borrowing to fail. It's like that's how they make money. So in the background, yeah, we might see there's bank closures. We might see contractions and layoffs and things like that. It's like it's a slowdown. It's going to happen. We can't burn at both ends and run this crazy hot overextended market forever. But at some point, there's going to be a reality check. And but I don't think it's 2008 all over again. I really don't. I think the U.S. is stronger economically than I think people give it credit for. If it wasn't for the U.S., the markets would have been absolute crap last year. The U.S. and AI and all this other stuff, it was really all driven by the U.S. So it will be interesting if there's non-U.S. flows, right? Does anybody invest in China? Does anybody invest in Europe or invest in the Nikkei, the Japanese market? Japanese market's been a rip the last couple of years. With the Japanese yen going crazy, at least their Nikkei index has been crushing it. You know, I mean, I think since 2011, it's up like almost 300%. So that's been a one way train for a decade. So anyway, lots of stuff. Does that make sense? So my point is for this year that, yes, we're going to have to see, like, it all starts today. I mean, Jerome Powell's message today could set the tone for the year, good or bad, right? I mean, if he wants to be firm and say, look, nobody's listening to me, but I keep saying we're going to be targeting 2% inflation or sub 2% inflation. We're going to, whatever. He talks both ways where he's like, we could raise rates, we could cut rates. And then the market just kind of tiptoes the line of like, what do we do today? I think he's played his hand enough that the markets are now like, okay, the inflation data is improving. It keeps getting better. The trend is lower. We looked at a source this morning. Trueflation shows 1.97. That's not the same as core CPI. That's not the same as CPI. That's not the same as PCE and all these other indexes that we're watching. The Fed's watching PCE for the most part. CPI is what everyone looks at as far as your talking heads on all your outlets are talking about CPI. But yeah, I mean, it's trending lower, and there's lagging indicators like shelter, higher prices. I mean, I'm not sure where everybody lives that's watching this session, but I have yet to encounter a real estate market in this country. I'm in the US. I've yet to encounter an area where it's like, oh yeah, real estate's super cheap right now. Nowhere. Even if you are in the middle of nowhere, USA, real estate is ridiculous. I mean, I'm in an area that this is like the most expensive I've ever seen. New builders are coming in, building homes with 300 to 400 people on a waiting list, charging an obscene amount for builder grade homes with no upgrades, and they're charging 2 to 2.5 times what they should be built for. I mean, the builders out here are building at market plus, not cost plus. It's insane. It could be. I mean, if I was in California, it'd be way worse. But I'm not. I'm in Utah, and it's terrible out here. So it's a terrible time to be a buyer unless you have a ton of cash. But I mean, I just think the value that you're paying, you're paying a ridiculous amount, but it's going to be pretty well insulated. I don't see housing prices really falling a bunch because if they fall and dip, and all of a sudden we see the Fed cutting rates and bank cuts rates, and let's say mortgages drop from 6.5% down to 6.5% down to 5.5%, could be possible the next 12 to 24 months. If that's the case, you're going to see a wave of refinancing because people that close at 6.5, 7% want to save something on a 30-year mortgage, and they will. So, I mean, all this stuff happens, right? This is all crazy stuff in the markets. Why can't my? There we go. Um, this is what all just kind of. It's like it's the butterfly effect. One thing happens and it flaps its wings and it can affect the entire economy. But it's either like you're turning the Titanic or you're turning a cruise liner, or I mean, just you don't see stuff happen instantaneously. If it happens instantaneously, a lot of it's noise, right? A lot of it's noise. The markets are super liquid and super efficient. And so that's why price action is so important. So let's get back to this for a moment. I feel like I've just been talking and rambling and narrating. But the reality is this, I mean, we're at 487. We tapped the weekly pivot for this week right here. So we tapped the weekly pivot. My charts are a little bit messy here, but bear with me. So for the weekly candle, okay, we have fallen for the entire week with this long kind of indecision candle. Now, this could very easily set up for a decision candle, indecision candle, and then next week into this week could be a decision bearish. We could start to see a bit of a correction coming in. I don't think this is a top necessarily. I think this is more of a look. We have these highs from 2023. We have this area right in here that could offer some support. And I think the SPY is still going after. I mean, without really a lot to affect it. I think the SPY and the S&P is still going after 5,000. So the SPX at 5,000, the SPY at 500. I think the Dow Jones at 4,000, and the DI at 400. I think those numbers are very possible milestones this year to be hit. And it might be crazy because you just have like perma bears and doom and gloom and all this stuff out there when the reality is the markets want to go higher. You know, Lonnie says housing stocks are also hard to buy at the moment. Yeah, they're terrible to buy, um, which is why I'm not touching them. I mean, we were long on Pulte Homes. What's crazy? Obviously, I'm a little bummed. But we were long on Pulte Homes. It was back at $40. I owned stock at Pulte at like $43, and I took profit at 50. I mean, and what was interesting is that bottom that was put in was in all the anticipation of housing supply is going to be so in demand that it's just going to go crazy. And sure enough, I mean, this is a 200% upside, right? Did I own the stock the entire way? No. I mean, I took a whopping $10 a share, but now, I mean, I can't justify buying home stocks like this. I mean, I think they've had an amazing run. I think now it's time to find some equilibrium, and we'll just let supply and demand do the talking. You know, because all they're going to keep saying is if they build homes and let supply catch up, guess what happens when those houses sit on the market? They sit and they don't sell. They sit because prices are too high. They sit because interest rates are still 6.5, 7% for mortgages. That's ridiculously high. Hang on a second. I've got a trade running. Let me check my Google position. So I just saw a fresh low, 873. Oh, I'm gonna take profit, man. I'm getting out of this thing. 8.70. Come on, get me out of here. This is right before FOMC closed me out. 870 closed. Got it. All right, hot diggity. Let me update this really quickly for my trade group. Delta Trader, equities on demand, and Delta. Uh, Google closing for 8.71 credit. We paid $5.89 for it, so we're just shy of $3 net. So 5.89 minus 8.71 closed out for 282. Okay, taking the profit. All right, let me log that. That is Google. That is 8.71. That is a win. And that is what I do the math on? 282. Okay, taking it. So what I was looking for today, and I had told traders I would do this morning. If it came down and revisited fresh lows of the day, 140.87, that's our fresh low of the day and still pushing lower. Let me see what that trade. It's probably trading for more than what it has closed it for. Right now, it is trading for 877. Yeah, get another 5 cents. With FOMC, I mean, hell, the thing might push down and give me another dollar or two today, which is totally great. But I'm going to take the profit. That's still right around 40%, which I'm happy with. 2.82 divided by 5.89. That's a 48% return on that trade. Pretty happy with that overall. I'll take it. So let's just add it up. And we still have FOMC coming in an hour and a half. Okay. All right. Let me get back to the chat. Make sure I'm not missing anything. When'd you take that trade? I took it this week. So I think we posted this trade because I looked at earnings. So here is earnings for the week. We knew that Google was coming out Tuesday. So I believe I put the trade in on Monday. So for equities on demand and Delta Trader, I put the trade in on Monday in anticipation of Tuesday's earnings after market. And so Google, Microsoft, AMD, Google's done now, and then I've got Microsoft and AMD still running, and I'll let those do their thing. And then for tomorrow, I've got a trade. So tomorrow after market, Amazon and Meta and Apple have earnings. I have a trade on Meta and Amazon, and that'll wrap up this week's earnings. But those expirations are out to the 9th, or they're out to the 16th. Okay. Okay. Let's see. I have to run one or more of the rooms, not necessarily for day trading. Yeah, I don't day trade, dude. I'm not a day trader. I think day trading is one of the most difficult things. So I trade every day, but I am basically managing portfolios, lowering cost basis, changing positions, taking new trades. I mean, my time horizon's all over the place. If I see a good opportunity for today, I'll take it. It's pretty binary, it's either a win or lose. But for the most part, I'm a builder. I'm an accumulator. I like to build positions that I think have good payout potential. Earnings plays are a bit more of a toss up at 50-50, but there's probabilities and math that go into it. So it's good volatility. I mean, I expect with this week with volatility, there's a reason for the markets to move, and this is a good example. Look, earnings was positive, right? So somebody, and this is what happens. Like people see earnings, like, well, I'm just going to buy Google because it's a great company, right? Well, you buy it at 151, and now it's down to 140, and you're in a drawdown. You're like, what the heck, man? Right? I mean, you're down 7.5%, and you just got started. So we take a trade with options where if it goes up or it goes down, I can make money on this trade. I don't care what direction it wants to go. For me, my trade was I was risking about 1% and I just closed out for about 0.5% profit. Okay. Now that wasn't a 1-to-1. I get it, but my probability of profit on these trades is usually about 75% to 80% wins. If you calculate these right and price these out right, usually you can have a very high win percentage, which takes care of the fact that I'm giving myself or I'm giving the market back if I took a full loss, and the chances of a full loss in this are slim to none. That's what's nice about this too is we can make an assessment. We don't have to hang on to the trade. So anyway, I'm just trading volatility right now, and for me, I risk 1%. If I can grab 1%, awesome. For a lot of the trades I take and I like and I'm willing to hang on to, 1% could be 2, 3, 4% pretty easy. So happy with Google. I'll take it. All right. Anything else? We've been going for about 40 minutes. Any charts? Anything you want to talk about specifically? I mean, for me, FOMC is coming up. I'll be live with Nick Syke and A1 Trading in an hour. You can join us on that YouTube session, and then for the rest of the day, I'll just be working through my portfolio until closing bell. I've got a bunch of content and stuff to do. I know for the next couple of weeks on my personal YouTube channel, if I go back to my channel, youtube.com, typing in one hand is always fun. If I go back to my YouTube channel, I'm going to start a new playlist. I've got, my trading 101 playlist, and I've got other stuff, and I'm trying to build out as much content as I can. One that I talked about in Discord this week is like strategy talk, or like a one-stop strategy talk. And I just want to do like one video. Maybe it's going to be 30 minutes or 60 minutes, but I'm going to dedicate that entire video to like one strategy from start to finish. And I think that'll be helpful because I've got a ton of stuff I've built over the years, and I've got robots and strategies and things I put together. And I hope it's helpful. And it'll be a combination of Forex strategies, option strategies, trading stocks, dollar cost averaging, using technical analysis, all sorts of stuff. So I'm going to build out that playlist, and that way it's there. I can house it in its own thing. I can put it under Trading 101. But point is, I just want it to be, learning material for people to grab onto, and it's there for you. And I wonder, I mean, I've been noticing like my YouTube channel, I do a lot of live sessions like Mondays and Fridays, and I'm sprinkling in Wednesdays. If my live sessions are kind of overtaking my other content, I don't know. I'm curious like how my account's being like tracked by YouTube and the algorithm, because I want long form content or full on stuff here where you can learn everything from start to finish on my channel. I just need to know what's the best way for other traders to find it. So that's that's a weird process. I don't think we'll ever master the algorithm, but I just kind of do it as a creative outlet and a labor of love. And if it helps people and they can find me, great. Eventually, my reach will reach enough people that they'll find me. You know, if not, I'm just doing it for fun. So anyway, all right. I think if we're a little quiet in the chat right now, we've got another hour just to kind of take some deep breaths. Go out and get a walk in, because come back and see where the fireworks start to kick in at around 2 p.m. Rate decisions are always crazy. There's not expected to be a rate change, but like I said, this is what Powell's going to do today. He's going to set the tone for the year. And I don't know if he's coming in with an iron fist and saying, look, you idiots, we're not going to raise rates. We're not going to cut rates. We're just going to keep doing the same thing and tell you the same thing, which is we'll do whatever we need to do. And then the market's like, well, now what do we do? Or he comes in saying, everything's better, blah, blah, blah. And the market likes it. Or he says, everything's going to get worse. I don't know. Obviously, I don't know. And I don't care. If you want to read his statement, if you want to watch his press conference and listen to the Q&A, good luck trying to figure out what he says translates into price action. The best thing to watch during a rate decision or a press conference is a currency strength chart reader and see what happens in real time, or watch your prices. A good example would be this. If you just watch this for today and watch the DXY, what happens after today? If the DXY is up here above, that's a good sign for the dollar, but a bad sign for stocks, because that's going to be risk off trading. If the dollar is down here, that's bad for the dollar, but great for stocks because it's risk on trading. If it stays in the middle, it's going to be a very noisy day. That's trading. So price action matters the most. Fair? Okay. All right. I'll let you go for today. If you want to jump in and join me for A1 Trading at 1:45 p.m., check them out on YouTube. Just go to A1 Trading. You'll find it live. And I posted it also on my Twitter, I think. So anyway, that's it. I'll be back for my live stuff on YouTube at 9 a.m. on Friday, and then trading rooms will commence, and we'll start back up tomorrow. And yep. Jan's asking for Discord. Let me post that Discord link right here. So free group chat invite doesn't expire. Copy. Go back to this. So, uh, oh my gosh, this freaking arm. I had a radial fracture on Monday night playing basketball. This idiot clipped my legs, and I fell straight armed right to the floor and fractured. It's right at my elbow. It freaking kills. Discord group, free group chat. So there's the link within that Discord group. A couple of things. So Discord group, free group chat, good for everybody. I post a blog every week on Friday. If I post anything on Twitter or share something on Twitter, it's in that thread. Any analysis, anything that I find, I share earnings reports. Education, I have links to my robots. I have links to my trading rooms. I got discounts, promo codes. I have affiliate links. Actually, when I'm joining A1 Trading, their Edge Finder software, I've been affiliate with them for the last couple of years. I've been working with Nick quite a bit. And their Edge Finder dashboard is awesome. I mean, it's essentially an AI powered dashboard scraping the internet for all these great data feeds. And then I also have some affiliates with tradingindicators.com for testers and indicator bundles. Daniel Singh and the developer team are great. And then also my private instruction, which is, like I said, private workshops, one-on-one, groups of 5, groups of 10. You let me know what works for you, but we can just chat and get those all scheduled. Okay. And if you're coming in the free group chat, like Jan just did, awesome. Nice to have you. Okie dokie. So, all right, I'll let you go. And if you're joining me for A1 Trading, I'll see you in an hour. And thanks for being here. Much appreciated. If you're on the YouTube channel, hit the thumbs up button for me, like and subscribe, all that other good stuff. Help the algorithm, whatever it is. It's impossible to know, but I'll be here. All right, everybody, take care. I'll see you soon. Thanks. Bye.